Welcome to ThinkTech on OC16, Hawaii's weekly newscast on things that matter to tech and to Hawaii. I'm Jay Fidell.
And I'm Donna Blanchard.
In our show this time, we'll take a look at the Offshore Investments program that ThinkTech presented at Laniakea on April 16th.
The program was intended to ascertain the state of offshore investments in Hawaii and how important they are and what we can do to better manage them.
The program was also intended to cover some of the troubled investments we've had in Hawaii and to find solutions that can create win-win outcomes for the investors and the state.
Do we need offshore investment in Hawaii? Are we getting enough to meet our needs? Are we getting the right kind? Are we doing the right things to get it? Once we get it, are we doing the right things to properly manage it?
And the blockbuster question these days seems to be, do we really want investment in the first place? All these issues are critically important to the future of our state.
Our panelists were Paul Brewbaker, an economist with TZ Economics, Christine Camp, a developer with Avalon Group, Mike Fergus, an investor with Fergus and Company, Karl Fooks, CEO of the Hawaii Strategic Development Corporation, a state agency attached to DBED, Larry Foster, former dean of the UH Law School, who has also practiced in Shanghai, Gerald Sumida, a business attorney with Carlsmith Ball, and John Wallenstrom of Forest City, Hawaii, a property and energy developer.
Read what the Fed plans to do, but they've announced that they're going to withdraw, they're going to back out of quantitative easing down the road. First, they're going to raise interest rates, and the only question is the timing and how much, so you all know that, so wave. There's the 3 rounds of quantitative easing that Ben Bernanke initiated, the final round concluding last fall. As I say, there's the discussion now about the exit part of the strategy, which will involve eventually sort of a mirror image of that as they drain the excess bank reserves. But before we get there, we're going to have a period of rising interest rates. And fortunately, the Fed publishes their interest rate forecasts, so you don't need mine. These are distributions of FOMC member forecasts for the end of year Fed funds target rate, and then the average. So this, like, you know, in your econ class, right, there's the, oh, go back. So there's the Korean guy at the top who gets A every class, and then the butters from Waminao and Kailua at the bottom, and then the Japanese girls from McKinley are in the middle. And the average, 75 basis points at the end of this year, 2% at the end of next year, 3% the year after that, a long-term rate in the neighborhood of 3.5% to 4%. So now we know where we end up. And as a consequence, we can imagine the path of the overnight interbank lending rate and imagine where longer-term rates, and I've got the Treasury yield curve laid out here, the term structure of interest rates. We can imagine how that may evolve as we go forward. So we don't know when this is going to start. It could start as early as next month, or I'm sorry, June. You know, it's coming.
We read about luxury condominiums being built and sold to wealthy outsiders. We read about REITs increasing rents where we operate our businesses. We read about big boxes moving into neighborhoods like Kailua, and so forth and so on. And so for some, it has been unsettling, but really, is that the full picture? I may be preaching to the choir here for a lot of you who are businesses, but those of us directly or indirectly encouraging outside investments in Hawaii.
I'm a great supporter of bringing outside capital to Hawaii. In my experience, offshore capital is more imaginative in the development of property and much more aggressive and less risk-averse than our local investors. We need outside capital for the development of hotels and major commercial properties, for scientific projects and transportation projects. I also believe we as a community need to be kinder and more appreciative of offshore investment in Hawaii and appreciate the risks they take. But not all capital is created equal as it affects our community, and we need to be aware of the differences and accept outside capital for what it is. Offshore capital is generally just interested in economic returns and only shows interest in the community if the community can affect the investor's project. And I have no problem with that. That's the way our free market works. You aren't going to see offshore investors giving millions of dollars to local charities the way our own Jay Scheidler does, but you are likely to see local investors do exactly that. Howard Hughes set up a foundation last year and received a lot of publicity with their $1 million donation. Lost in the story is how Howard Hughes gained the state of Hawaii out of millions of dollars. What they did, Howard Hughes used a loophole in the REIT law to create a captive REIT that would own all of Victoria Ward properties for the sole purpose of avoiding state income tax. They avoided state income tax on more than $67 million of income, which is around $3.6 million in lost taxes. But Hughes issued a press release about their $1 million donated to our community. That is what you can expect from offshore investors. I don't blame them. They're acting in the best interest of their shareholders. Local investors, on the other hand, reinvest in our community and legitimately support our local institutions. How many of you are aware that Ala Moana Center doesn't have to pay income taxes in the state of Hawaii? There's a few, and we've made some progress educating people. Well, in addition to Ala Moana Center, neither does Pearl Ridge, Ward Center, Ward Warehouse, Public Storage, Bishop Square, Harbor Court, Davies Building, Poly Safeway Longs, Salt Lake Shopping Center, First Insurance Center, most of Mapuna Puna, and over 200 properties in Hawaii. We have more than 25 real estate investment trusts operating in our state. Let me explain what a real estate investment trust is. A REIT is a corporation like any other, except unlike A and B, a REIT gets a tax deduction for any dividends that it pays to shareholders. So none of these corporations with REIT status have to pay state income tax in Hawaii. Their shareholders pay income tax on the dividends they receive in the states in which they live. That means other states are collecting the income tax on the net income earned by Ala Moana Center, for example. A very large portion of Ala Moana Center's parent company is owned by a Canadian company, so no state income tax is paid on their share of income ever. Hawaii is missing out on approximately $50 million a year in income tax because of the REITs operating here.
The Hawaii Strategic Development Corporation is an agency of the state, and our mandate is to help mobilize private capital investment into new sectors of growth for the economy. There's been a long policy in place to try to find ways to find new growth opportunities outside core areas of tourism, construction, and military spending here. And our community has struggled for many years to figure out, how do we unlock the potential of making Hawaii a place where technology companies find it hospitable and profitable to operate. So what I'd like to talk to you about is the investment program we've been implementing over the last 3 years. We've been able to mobilize about $20 million of public funds, a mix of federal and state funds, and then partner that with private investors from both inside of Hawaii and outside of Hawaii to put in place this broad ecosystem that I'll start to walk you through, that we are now calling Startup Paradise. And just so you understand Startup Paradise, this is a name that the local entrepreneurial community has come up to try to brand Hawaii as a great place to start and operate these new age businesses. And the tech sector we think of in a broad terms, not just software, not just computer related, but really entrepreneurial, intellectual property-based businesses. So where brains are really driving the value proposition. So Startup Paradise is, in reaction to Silicon Valley in the Bay Area. Los Angeles is Silicon Beach. Portland is Silicon Forest. Kansas is Silicon Prairie. New York is Silicon Alley. The community here just determined they're not Silicon anything in Hawaii, and the name Startup Paradise was developed. And so similar to the comments that I think Paul made earlier, we can't change boundaries, we can't change regimes. The way to attract investment and to spur people to take risk is to create an environment that they understand, that's consistent, that meets their expectations, and drives returns. And that has really been the way we've thought about mobilizing our investment strategy. And so what you see now on this graph from your, left-hand side is we start with entrepreneurs. We try to develop opportunities for entrepreneurs to be bold, to take risks, to get out in the community, showcase their ideas.
There's a lot of money in China, and the goal of pretty much every other country in the world is to how do you get that money from China into your country, into your investment. Little bit of recent history. 10 years ago, China's overseas investment was pretty much close to zero. They were a huge recipient of what we call foreign direct investment into China, but they were doing little, if any, outbound investment. A change in government policy roughly, 7, 8 years ago, much as in Japan that fueled the Japanese expansion out of Japan, the government changed their policy. And the government began promoting overseas investment by Chinese businesses, made it substantially easier for Chinese businesses and individuals to take money out of China and invest it overseas. So it's been a government effort to sort of promote this activity by China. So what do we see as a result of that? The first sort of waves of investment out of China, they were buying technology. They were very much interested in increasing their own technology know-how, and one of the best ways to do that is buy technology. So buy Volvo and learn how to buy a better car. Part of it was branding. So they bought the Lianxiang, a Chinese high-tech company, bought the IBM ThinkPad division and rebranded it as Lenovo. Suddenly there's a China brand that everybody knows. So they were buying brands, they're buying technology. Still ongoing, a big resource buying binge. Australia, all around the world, Africa, looking for resources to feed the needs of China as it goes through continues to go through its modernization phase. What we've seen, and so a lot of these earlier investments were sort of what we call the state-owned enterprises, big conglomerates with endless amounts of money that they could put into investment. That picture has really changed dramatically in just the last few years. And what we see is a much more diversified investment approach by China. And the entities coming out of China doing the investment have greatly diversified. So the state sovereign wealth funds are very active out there. Chinese insurance companies, as our insurance companies, institutional investors in the U.S. And Canada, wherever, are going out looking for investments. There are a number of ultra-rich in China. They too are going out looking for investments. Some of them are still sort of going out and buying technology stuff, but what they're also looking for, as China's economy evolves, some would say devolves, but as China's economy gets a little bit more stagnant, they're looking to diversify their own investments. And so they're, for example, going out very recently looking at big commercial building investments or signature hotels all around the world, looking for a stable revenue stream over the years, trying to get some of their money outside of China and in other jurisdictions that gives them a better sense of stability, if you will. So on the real estate side, for example, and when I say real estate, I'm not just talking about condos in Ward Village or mansions on Kahala or anything like that, but really a wide range of real estate investments.
On Tuesday, Jay asked the question, or made the statement, we don't have enough money to grow our economy or build our infrastructure. The odd thing is that we also turn away billions in offshore investments and extravagance we can hardly afford. Turn away, true or not, qualified? What's very clear, and what almost all of the speakers have indicated, is as a state, as a society, we are capital poor. We need foreign direct investment, whether it comes from Asia, Europe, or the mainland, where most of it, until recently, has come from. We need it for commercial development, infrastructure development, as well as human resource and workforce investment. The question is, do we attract it or do we repel it? And more recently, and in focused way, how do we respond to this question? We followed all the rules. We did extensive local community outreach. We accommodated lengthy delays. We tried to do everything right. And then at the last moment, the very last moment, vocal opposition emerges from nowhere. They never talked to us. No visible support arose from the locals who said they supported us, and the project died. That's the real question that we face somewhat starkly today in any number of examples which we all know about and which I need not mention. Now, let's look at some perspectives about foreign investment. And Karl used a very interesting and appropriate term, the investment environment. What is Hawaii's investment environment? And I'm going to mention a number of things that, whether they're true or not, you might, and whether the perspective is correct or not, I'll leave to you. But look at some of these things. First, Hawaii is a special place. We have physical environment and beauty. We have a multicultural heritage. We have the aloha spirit. We also have geographic and social areas that have not yet been, quote unquote, destroyed by, quote unquote, progress or change. And approaches to change. In the 1950s and the 1960s, change was welcome, money was welcome, progress was welcome. But after that, there was growing resistance pervasively and on different kinds of levels. The feeling referred to beforehand of being overwhelmed. Too much, too fast, not controlled. Money moves things, culture gets destroyed, values get destroyed. And then we have people who supported a lot of change, but also opposed. But the question is, who opposed? Why did they oppose? How did they oppose? Are we facing the tyranny of the minority, where the silent majority is actually in favor of something invested from foreign sources, but the tiny minority, which has a very high decibel factor and is media copy and media savvy, ultimately rules the decision? And we also have, perhaps supporting but perhaps aggravating this, particularly on the neighbor islands, the rise of gates or gated communities that seem to indicate separation from those who are extremely wealthy, not resident, have second homes, do not participate in the local community.
Hawaii, and this is a little blunt, but it's true, we don't have job growth, so our real estate development is based on obsolescence. We're just replacing stuff. That's really all we do here, because we don't have the type of economy right now that I hope Karl can create with his efforts and others. Next slide. So here in Hawaii, Forest City is a very large company. Hawaii is not on the national real estate scene. We probably wouldn't be here but for the privatization project with the military. Next slide. It's about a $2 billion project. Forest City has put equity in. The military has put equity in. We floated a whole bunch of bonds. Next slide. Some of you remember what it looked like, and now you can see what it is. It's a project that we're very proud of. We have in total about 220 employees here in the islands. Most of them are actively involved in the maintenance of this. This has been neat because actually we've been one of the prime landing places for a lot of the energy incubators. So when some of these people are working on these new technologies, we've been very supportive of those efforts and have a number of those initiatives going on in our housing. We need housing to house the smart young people who are working the jobs that Karl is going to create, so don't disassociate it. But let's grow the whole economy. We need more prongs to the stool that we're all sitting on.
We have to remember we're capital poor. We need capital, but we also need to decide what kind, how we get it, how we manage it, how we use it, and for what purposes. Other places have done that relatively successful, and we should be able to learn from that as well as from our own innovative ideas.
We can't be a Venus flytrap. We can't wait for the investment to come. We have to go out there and pitch our case. We have some really good stuff going on in Hawaii, but we need to tell people about it.
So often we focus on things that have gone bad, and I think as investors we can all talk about things that go bad in our portfolio, but if we're still alive as investors, I must admit some of our portfolio is actually performing.
We also need to pay attention to our tax base and use common sense in enacting tax laws that tax everybody the least amount possible, not create little favorite pockets of investment that escape taxation entirely.
Offshore investment has always been part of our community. It's good for our community. I think we need to stop thinking about investments as terms of offshore or onshore. We have to look at investment as it's good.
Capital, human capital, and natural capital formation, or at least stewardship in the latter case, are all important for Hawaii's future. And to get the physical capital that we need access to global capital markets.
After the Q&A, we took our customary walk around the room to get audience reaction to the program.
I really worry about our state tax base, and I don't think our legislature really understands taxation very well, and I don't think that the tax department's got their head in the papers. They're not really paying attention to.
Oh, great. I mean, I always like hanging out with people who are actually doing the stuff.
It was an exciting program. There's a lot I'd been in the back of my mind thinking about offshore investment. That if I needed any convincing, which I didn't, we need offshore investment in Hawaii. That's our only. And we've had it for decades, if you will, for centuries. That's what economic growth is about.
Actually, I'm new to Hawaii, even though I have my place here many years ago. And then I came from Shanghai, and then I'm very active in the business community there. So I know Jerry and Larry and Brenda for a long time. And so this is really good for me to open my eyes to know more about Hawaii and the situation, and also talk about real estate today.
We know that there are two forms of capital. One is exploitative, and one is long investment rooted capital. And we have been subjected to both, and there will always be both. And it's up to us, if we really want capital, which we do need, to seek the kind that we want and make it an investment-friendly environment.
I think it is important that we think about the way capital flows and why capital flows and why it doesn't flow, and be thoughtful and careful with that. I guess is one of the considerations I have. It is very competitive, and I have had a pension fund, a very large pension fund, tell me that they will not invest in Hawaii, and it was for a combination of kind of it was a union thing and a bureaucratic thing.
So much of the offshore investment is related to property, to property and real estate development. And I think Karl Fooks is kind of a voice in the wilderness, because you have to think of investments other than property, but it would be the tech community.
There are a lot of bright business people who can play a big role in bringing offshore investment to Hawaii, but we need to see more policymakers. We need to see more government leaders. We need to see legislators and a governor who have a passion for making it happen. When we can bring that together with the businesses, I think we'll see great things for our state.
Solutions to deal with the problems that have emerged around offshore development were discussed, but as we left it, more work needs to be done.
Offshore investment is a core issue affecting our economy and our future, and ThinkTech will, of course, continue to follow it going forward. If you want to know more about public policy issues of this nature, check out our talk shows and movies on thinktechhawaii.com, or sign up for our monthly luncheon programs on thinktechhawaii.com.
And now, let's take a look at our ThinkTech calendar of events going forward.
ThinkTech broadcasts its talk shows live on the internet from noon to 5 p.m. every weekday afternoon. And then we broadcast our earlier shows all night long. If you missed a show or you want to replay or share any show, they're all archived on demand on YouTube.
Visit thinktechhawaii.com for our live stream and YouTube links, or to join our email list and get these links and program advisories on our upcoming shows.
We also invite you to be part of our live audience in our downtown studio in Pioneer Plaza. Contact me, Jay, at thinktechhawaii.com. Raise your awareness in every way on ThinkTech.
On May 21st, ThinkTech will present its May Downtown Forum Luncheon Panel program on the subject of public spaces in Hawaii. How can we best preserve them?
Hawaii is at risk of being paved over. So how can we preserve our public spaces and realize the new openness we want for Hawaii?
Join us for this important discussion. Get current on the exciting things that are going on in our city and in our state. Be a part of the conversation and sign up to attend on thinktechhawaii.com. We'll be right back to wrap up this week's edition of ThinkTech, but first, we want to thank our underwriters.
Okay, Donna, that wraps up this week's edition of ThinkTech. Remember, you can watch ThinkTech on OC16 several times every week. Can't get enough of it, just like Donna does. For additional times, check out OC16.tv.
Definitely, Jay. For lots more ThinkTech videos and for underwriting and sponsorship opportunities on ThinkTech on OC16, visit thinktechhawaii.com. Be a guest or volunteer, a producer or intern, and help us reach Hawaii.
Thanks so much for joining us on ThinkTech and for supporting tech, energy, diversification, and globalism in Hawaii. You can watch this show throughout the week and tune in next Sunday evening for our next important weekly episode. I'm Jay Fidell.
And I'm Donna Blanchard. See you center stage.
Oh, oh.